Welcome, we'll explore the basics of the period. Please like my video. Let's dive in and get started.
Every year, the tax cycle resets. Under Section 20 of the Income Tax Act, the default basis year is the standard calendar year, a 12-month window running from January 1st to December 31st. But the business world rarely waits for January. Companies launch in April, merge in July, or adopt unique fiscal year ends to match a global parent corporation. Because of this misalignment, tax law uses the basis period. A basis period is a legal time frame used to determine exactly which months of income belong to a specific year of assessment, regardless of when the company's internal calendar begins. For a business, locking in this timeline is the first step towards tax efficiency. Only with a defined basis period can a company prove its expenses are deductible or claim capital allowances, tax deductions for the depreciation of business equipment, during its first year of operation. Without a standardized legal mechanism, a company's tax liability would be impossible to verify. Section 21A provides the rules to translate these varied corporate schedules into a predictable tax cycle. Consider Company XYZ. They were incorporated on March 15, 2025, but officially commenced operations on April 1st. They closed their first set of accounts a year later, on March 31, 2026. The challenge is determining how to map this April to March operational window onto a standard year of assessment. Section 21A provides the path. We check the initial accounting period. Are the first accounts made up for exactly 12 months? The answer is yes. Since they cover exactly 12 months, this accounting period becomes the legal basis period for that year of assessment. For Company XYZ, the block from April 1st to March 31st is officially recognized as the basis period for the 2026 year of assessment. By meeting the 12-month requirement, the company establishes a stable tax profile immediately, allowing them to claim their first-year capital allowances without delay. Setting a stable baseline for a new business depends entirely on this initial 12-month test, ensuring internal reporting matches the requirements of the tax code. While new businesses start from scratch, existing companies occasionally disrupt their established cycles. This is the case for Company ABC. Company ABC traditionally closed their accounts on December 31st. However, in 2023, they moved their year-end to September 30th to align with their parent company's reporting schedule. This creates what is known as a failure year, the specific year in which a company fails to close its accounts on its normal expected date. To reset the timeline, we look at the new accounts. Because these cover a period of less than 12 months, specific fallback rules apply. Since ABC previously followed the calendar year, the law provides a pathway for transitioning to a shorter period. This logic is guided by a singular priority in the tax code. There must be no missing year of assessment. The law bridges the gap by mapping the new September 30th date into a continuous sequence. This ensures that every month of the company's operations is accounted for across the 2023 and 2024 tax years. These rules ensure that even during a major corporate restructuring, the sequence of taxation remains unbroken, and every period of income is correctly assigned. As Company ABC's timeline aligns with the standard cycle, we see how thousands of these individual corporate schedules eventually merge into the national tax record. Whether a business is just starting out or shifting its entire financial calendar, Section 21A provides the consistent framework needed to maintain order. This legal synchronization is what allows a modern economy, comprised of startups and massive conglomerates, to operate under a single, unified set of rules. By establishing these clear transition procedures, the tax system maintains continuous tracking of business income and provides a stable, predictable flow of revenue. The basis period is the mechanism that ensures every business, regardless of its internal calendar, remains a consistent part of the national economic framework.